What happened was during the regional bank crisis, and you and I did a podcast during it, the regional bank crisis, Bitcoin, as regional banks were imploding the stocks, Bitcoin went from 19,000 to 30,000, and it's 30,000 today. Now, part of the reason it's gone back to 30,000 after a little bit of a jog here is speculation about a Bitcoin ETF, and we can't say anything about that. So that the government, if the government understood what we are talking about now, about the potential for Bitcoin, in 2009 or 10 or 12, they might have just tried to squash it. But it has been a little bit of a surreptitious war. It's been couched in terms of technology as a matter of fact, and therefore, is it in the purview of any particular government agency? Do you think we are past the point where the government can come in and squash this with Mike speaking? I think what I'd like to explore here is clearly Bitcoin is playing one of the three major roles of money: store of value, with a quantity rule, right? We're in a period of great experimentation, which Hayek said we needed to find the best monetary system. And I'm wondering, and maybe Ophelia, you can jump in. I know what art means, and I agree with this idea of a price rule and, contracts based on a price rule. Do we think that maybe in this grand new experiment that there might be a fork of Bitcoin to enable a price rule? I've been toying with this idea and trying to figure out the answer. So I am wondering if in this experimental world that we're in, and I think Hayek would be thrilled to be studying this right now, I am wondering if for that, in order to serve as the means of exchange, as opposed to just the store of value, how would we accomplish that? Would it be it's hard for me to envision this, a fork. So basically, these are software programs, and if you want to go in a different direction, you can. Now, Bitcoin is Bitcoin, and it's a powerful ecosystem, and we don't think anything's going to derail that. But if someone wanted to develop an ecosystem related to Bitcoin, it's the core developers who they will never, from what I can see, what you can see probably, what we all think is that the core developers would never modify anything in terms of the mathematical metering to get to 21 million units. The problem with that is, what if the demand for it is much more than 21 million units as the economy evolves? There's no adjustment mechanism to meet increased demand. So what we're beginning to see is, as long-term holders increase, in other words, they're called hodlers, hold on for dear life, right? As those increase, another phenomenon is evolving here, where institutions are developing an interest in this new asset class. And, they could, that their incremental demand as the long-term holder base increases could force the price up parabolically, which would destabilize the ecosystem. We have to get back to this. Okay, we have this institutional interest brewing in Bitcoin. It's mathematically metered to go up at a measured pace until we hit 100 million units. But let's just say right now, because of the institutions expressing interest in this new asset class, the marginal demand goes up and drives the price up dramatically to $1 million. Bitcoin's at around $30,000 right now, to $1 million. Let's just say that happened in the world that we've been describing here. Do we need to get through that first, as you say, Ophelia, and stabilize the ecosystem as more and more become long-term holders? Or can we get to the world that you're describing, Art, with these other private actors? Well, what happened was during the regional bank crisis, and you and I did a podcast during it, the regional bank crisis, Bitcoin, as regional banks were imploding the stocks, Bitcoin went from 19,000 to 30,000, and it's 30,000 today. Now, part of the reason it's gone back to 30,000 after a little bit of a jog here is speculation about a Bitcoin ETF, and we can't say anything about that. So that the government, if the government understood what we are talking about now, about the potential for Bitcoin, in 2009 or 10 or 12, they might have just tried to squash it, but it has been a little bit of a surreptitious war. It's been couched in terms of technology, as a matter of fact, and therefore, is it in the purview of any particular government agency? Do you think we are past the point where the government can come in and squash this? In my experience, when investors focus obsessively on a number or two, and in the case it is employment and PCE deflator, lagging indicators that the Fed is using in its monetary policy, just obsessive, compulsive. I know we're near the end of that being important, and that kind of fits in with what you said, Ophelia. And then Art, what I love about these conversations with you is you are steeped in economic history. You and you understand monetary ecosystems better than anyone I know. And so what you're saying is you discover what is happening through crypto, and you're saying, that's it. It increases my confidence and my understanding of how this might evolve with the other actors.
As long as it goes from a quantity rule to a price rule. The price rule is central. Without the price rule, this system will die.
So that is where we need to go on this
next
one.
I think other companies like what Ophelia was saying, other instances like Berk, and these then become financial intermediaries, issuing their own liabilities, having their own assets, and being able to change the quantity to make sure that prices are stable. Once that happens, bye-bye dollar, bye-bye ruble, bye-bye mark, bye-bye yen, bye-bye pound. The pound has gotten so bad, ladies.